Here we go. We're live. We're live at the park doing our thing, doing whatever we want. We're drinking energy drinks, drinking a monster, morning monster. We got to get it going. So, welcome to the live show. We're in the bamboo area of Mingus Park. Early morning chill, trying not to get too much wood, but doing my thing. Oh, feeling ready though. Feel got the monster in the hand. Now the morning wood. When I say morning wood on the title, I'm talking about all this wood, all these woods in the morning, right? I couldn't have meant anything else. But welcome to the show. We're talking about a little investing. Also, as an Amazon associate, I do make a small commission off of any purchases you make from clicking on my links. So if you click on a link, make a purchase, I get a small commission at no extra cost to you. Check out the Monster Energy drinks. They're in the description somewhere. You'll find them. It will be next to energy drink. This is my energy drink of choice. This is what gets me going in the morning. Keeps me relatively focused, and I feel good. Maybe not. It's a good energy drink, though, honestly. One of the better ones. It's my favorite Monster one because it's zero sugar and low sodium. That's exactly what I'm looking for. But welcome to the show, everybody. Live at the park in the morning time. Feels good. But I want to welcome you all to the show. I think one of the best parts about the show is when we do live videos like this out in public. So I've got my old little notebook here, or somewhere, one of these days. Let's go, guys. But yep, got the handy dandy, got the notebook, everything that's. Oh, geez, there's a lot of crap in here. Oh. That's all right. Let's see what else we got here. Get the pencil somewhere. At least I'm trying to find the pencil. Oh. But yeah, we got the energy drinks. We got the. Oh, maybe I lost my pen. Oh wait, I didn't lose the pen at all. Oh, of course, the reason I got crap on me is because of backpack was sitting on the ground. Duh. But let's see here. Here we go. So we got, let's see here. So we're going to talk about a little investing. Might as well go over a couple theories. But overall, when it comes down to it, one of the main things, it's funny because my main guys, my inspiration for investing are two old men by the name of Charlie Munger and Warren Buffett. Now, I like Charlie more than Warren. Warren's great. They're both fantastic dudes. But Charlie might be one of my favorite dudes. Now, one of the big things we disagree on is the love of diversification. Now, I'm a huge fan of diversifying my portfolio. And he says it's because of ignorance and not knowing what you're doing. On the contrary, I think that you can still know what you're doing and still realize that the future is still uncertain. And that you want to be exposed to as many different asset classes as you possibly can. At least, that's the way I see it. But to each their own. Let's see here. But yeah, it's great to be out here. It's great to be doing a show. Mingus Park is honestly one of the better spots to do a live show, just because there's so much nature out here. It's very pretty. As you can tell, the backdrop behind me is just freaking gorgeous. Last time I was sitting on this bench, I was doing a show about what's going on with my job. It's getting a little murky. It's getting into some weird waters at the moment. But things happen, and whatever happens, happens. I'll just do DoorDash. And DoorDash would be probably less stressful. I mean, I do DoorDash already on the side, and even in the hours that I do DoorDash, it's never really that bad. But yeah, doing YouTube and DoorDash would be pretty much up my alley. So I already got a halfway decent camera, you know, and I'm monetized on YouTube, so I might as well take advantage of the opportunity. So, um, I guess while we're here, yeah, we can start talking about we can talk about a few investing philosophies. I'm going to try to keep my eye on the chat. Of course, there's nobody viewing at the moment. That's okay. It's been 6 minutes in, and sorry about that, folks. Had to kind of reset the stream a little bit, just in case. So, so one of the big deals that I talk about, and this is a morning time. I'm not exactly the best in the morning, but I'm functional to some degree. I mean, we talk about levels of investing and how diversified should you be. I think that's one of the biggest things on my channel. It's funny. You think with how much I love diversification, you think I'd be anal or something about the weighting in my portfolio. And to be honest, I don't really weight it at all. That's something I just don't do. Mainly because I don't really care to weight it, if we're going to be honest. If I have an overabundance of value in stocks, I have an overabundance in value of stocks. That's just the way I see it. My goal really is just to be spread out. And it doesn't really matter how I'm weighted. I just want to be exposed to things that are valuable and productive, preferably productive, but valuable at least at the bare minimum. For example, gold and silver are non-productive assets if they're just sitting, but they can be sold at a higher price at the right time, mainly because gold actually keeps up with inflation fairly well, in my opinion. There's a lot of data to back that up. I was going to say, though, stocks have performed pretty well against inflation, too. So it's one of those things. I prefer productive assets. That's why I'm so heavy in stocks. And productive assets are great. I think the reason that nobody gets into the stock market is because you hear all the time about like all the horror stories, the Enrons and all that, but you can mitigate a lot of risk just by simply diversifying your portfolio out. Because if one company goes in my portfolio, it's a blip on the radar, a very small blip. And that's one of the reasons I'm diversified, because if some companies that I love go belly up, it doesn't negatively affect my portfolio. The whole point of having diversification is being able to, first off, mitigate risk. My portfolio is so diversified, I could sleep soundly at night, not really caring what the market's doing. That's the whole point. Diversification allows you to still be involved in the portfolio, but not have to stress about the portfolio. Now, I could put all my money into Coca-Cola in theory, and totally sleep soundly at night knowing that I'm going to get a dividend. The dividend will grow. The company's solid. They got a great product pipeline. But at the same time, though, since the future is always uncertain, being overly concentrated into one single company or even just a few companies might be a bad idea. In fact, I think it is a bad idea. And I think it's kind of irresponsible, for guys like Charlie and Warren, because they've been, in a lot of ways, not lucky. They're good at evaluating businesses. I will give them that. But a lot of the times they beat the market for certain different reasons. Obviously they can read a balance sheet. Obviously they can get to know management. They could do all that. But honestly, for people like me, people like you, diversification is actually a good thing. It is a protection, obviously, against any ignorance, but it's a protection against ignorance of the future. Now, I know how to read a balance sheet like anybody's business, but I prefer diversification over anything. And in fact, I would take diversification any day. Because one, if you spread yourself out against U.S. international, you spread yourself, like with stocks, for instance, you spread yourself U.S. international through bonds, honestly, being spread out, having those yields, having that security blanket, are you going to have the fastest growing portfolio in the world? No, you're not. In fact, chances are you'll probably won't even beat the market. But the beauty is, let's say the S&P 500 actually does have a lull, right? Maybe it does suck for a while to own the S&P 500. You have to ask yourself the question, like, what are you doing with yourself? Like, what is the point? Should I keep holding it? You know what I mean? And yeah, man, not even a single viewer's popped in. This is wild. This is the first time. I wonder if YouTube is cockblocking me here. Nope, nobody in the live chat. Oh, we got one viewer. We got one viewer. Make sure you like the video, though. More likes, the better. We need the likes, I'll tell you. But no, ever since I got monetized on YouTube, there's been more incentive for me to do live videos like this, which is pretty awesome. But yeah, no, overall, like, diversification is a security blanket. Now, the thing about weighting is everybody's talking about, hey, you got to weight your portfolio. 60% stocks, 40% bonds, blah, blah, blah. I don't believe in that. I don't really care about it. In fact, if anything, I'm overweight by all technicality in stocks, but I'm really spread out in U.S. stocks, international stocks, you name it. So spread out across the board with those. Like, I have a ton of international ETFs, which allow me exposure to all those international companies. It's a huge advantage. You could say that I might be one of the most diversified investors in the world, mainly because not only not only am I exposed to different asset classes, I'm also exposed to different investing strategies. For instance, I've got covered call ETFs, which expose me to, like, which allow me to have derivative income. Right, derivative income is is huge, by the way, especially during crazy times. So, example, let's say there is a bear market for the S&P 500, Dow Jones, Nasdaq 100, blah blah blah. Having covered call ETFs that actually use those, like, ETFs as collateral, when the ETF actually writes, when the fund itself writes those call options, and it gets a little in the weeds, but when they write those call options, they use whatever ETFs typically they use ETFs as collateral instead of actually buying all 500 of the companies. They just find some ETF like the VOO. Not all the time do they do that, but some do. But I'm really spread out in the sense that I got a ton of covered call ETFs because it allows me to get some extra derivative income that I could utilize towards buying more index ETFs and things like that. There's a lot of disadvantages, though, to cover call ETFs, which is why you don't want to have tons of those ETFs overweighting your portfolio. Now, granted, I tell you guys, I don't really keep too much track of the weighting, but I do have an idea of how my portfolio is weighted, and that's an important thing. Really, the goal is to just be exposed to everything that is valuable. And one of the biggest mottos that I have is, there's two of them, two mottos when it comes to investing. If the government can print it, stay away from it. One of the reasons I don't actually hold a lot of cash is because the government continues to print the dollar and devalue the dollar. So cash is a horrible investment, even if you're getting a small yield. Like, for instance, I do have a high yield savings account, but the maximum amount of money that I'm willing to put into it of my own money is $10,000, right? And the reason I say that is because I'm not really a big fan of saving money. I'm just not. I don't believe in it. It's just not something I believe in. Oh, man. Oh, let's see how the battery's looking here. 66%. Yeah, but overall, man, international stocks, U.S. stocks, it's fairly easy, actually. You don't even need to get an ETF to get exposed to U.S. stocks, because if you're in the U.S. already, you're good. You have a brokerage account and you're in the U.S., you're pretty much free range to get one share if you really want to of any U.S. stock. But you could still purchase international stocks on a brokerage like a Charles Schwab or Robinhood, whatever any brokerage you feel like using. And yeah, you can get that direct exposure. And the great thing is we live in the no commission era. It used to be if you, whether you purchased one share of a company or 1,000 shares, you had to pay some kind of commission to the brokerage account. And usually, like Charles Schwab was actually pretty reasonable back in the day. I think they're like $4.95 commission just to get to purchase the shares that you want to get. And I think afterwards, if you tried to sell them, there would be no commission because you're just selling them. But yeah, to purchase the shares back in the day, you still had to pay a small commission. But now that we live in the no commission fee era, it's honestly one of the better eras to invest in because you can buy just a single share, not pay a single commission, and you're good to go. So it makes diversification across the board very easy, and it also allows people like me who just want to buy one share of an ETF and buy one share of another ETF and another and another and another. It gives us people like me the opportunity to just keep investing and investing. Let me put a poll up. Maybe that's maybe that'll get more people. Holy shit. Let me see if I can get a poll going here. Is that products? Pin live stream. Oh, I could tag products. Well, one of these days I need to start tagging products, but really my goal is to if Amazon Associates, I guess, ever kicks me off, I guess I could do Teespring, but got a lot of clicks on Amazon Associates, surprisingly. What do we got here? Give me 1 second, folks. I'm going to try to do a poll, if I could even get a poll going. No, it doesn't let me create a poll. Weird. Give me a second. Yeah, that's weird. Normally I could do a poll on these things, but I guess it doesn't allow it. Maybe I'm pressing the wrong stuff. I don't know. That's all right. It don't matter. But what it all boils down to, though, is, like I said, spread out your risk. I mean, hell, John D. Rockefeller did that shit. So I'm always spreading out my risk. But and this is something I think that a lot of, I put the douche in fiduciary. And but a lot of fiduciaries don't necessarily talk about spreading out beyond the U.S. I've talked to a few of them, and they just don't. And I'm like, why not? I mean, I know that international stocks have historically underperformed the S&P 500, but you can't predict the future, right? So if you can't predict the future, it's good to at least spread out your risk. Go a little international, get some ETFs for God's sakes. You know what I mean? And then you're good. But yeah, no, overall, that's one of the reasons I spread out my risk so much. Not only am I in stocks, by the way, I'm in bonds, I'm in commodities. I don't just limit myself to one asset class. I think that's a horrible idea because, and here's the thing, I'm not even a short-term investor. I'm fairly long-term. Now I do swing trade 20% of my portfolio because I bet against Bitcoin. So that's only like 2 ETFs, by the way, that I use. But other than that, every other ETF that I have is a strict buy and hold style of investing. So at least it's the smartest thing that one could do. But yeah, I was gonna say, like, John D. Rockefeller, even though there weren't as many options back in the day, he was good about spreading his risk. Like, that was the one, he was good about diversifying. And he loved dividends just as much as I do. In fact, if anything, I don't know who is more homosexual for dividends, John D. Rockefeller or Michael Garza. I don't know. I often wonder. But I know I love dividend payouts. I get a dividend every day because I have so many different ETFs, because I have so many different individual stocks, and I own just a share of all of these. And that's how I've been accumulating my portfolio. And one of the reasons is because my portfolio is probably the most stable portfolio out there. It doesn't move down very much. If anything, it's gone. It just keeps appreciating up. And the main reason is, like I said, I'm into gold. I'm into silver. I'm into the commodities. I'm into the bonds. I'm not a big fan of bonds because they're not very inflation proof, but I'm still into bonds because they do offer a guaranteed yield. I wouldn't say guaranteed, but for the most part, if you're diversified in bonds, you're going to get, especially a good bond ETF, you're going to get stable flows of income from the bond ETF. So it's good shit. Now, for those of you, I think I've said it a few times, ETF equals exchange traded fund. I do like to make sure that's very clear. Exchange traded funds, and for the most part are very simple. They are funds that are publicly traded that either hold a bunch of stocks or hold a bunch of bonds. They may not even hold them. They may be actively managed. There's no limit to what an ETF can truly be. An ETF can do, like I said, those covered call things. An ETF can hold hold an index of stocks, you name it, or bonds or whatever. And sadly, even though I think crypto is a grift, ETFs hold crypto, unfortunately, these days. And the SEC, the reason I believe we live in clown world is because the SEC has allowed crypto to gain public traction. Here's the thing, man. I know everybody's saying, oh, Bitcoin's the future, blah, blah, blah. We need a Bitcoin reserve. But here's the thing about Bitcoin. We still don't actually know who the real creator is. Like, we don't know what the intention behind it was. And if anything, there's a lot of theories that point to that it was created by the CIA. We're not going to go too in the weeds on the conspiracy theory shit, but the theory is that it was created by the CIA, and it's not a bad theory. It's pretty reasonable in my opinion. But I wouldn't. I'm not going to go in the weeds on that one. Some of the cryptographic algorithms, though, that are used in Bitcoin are pretty impressive. Almost seem like they could be developed by a. Even the source code's pretty interesting too. I'll have to take another look at the source code of Bitcoin. Actually, as somebody who loves software, as somebody who loves, you know, fiddling around with open source software, I've learned a lot. You know, it's so funny how much you can learn by looking at open source projects and actually becoming better at programming just by seeing how people program, like what type of functions they're creating, what type of libraries they're creating for their own software that they develop. So open source is great, man. It is a well of opportunity, and man, if anything taught me programming, I mean, sure, the books that I read taught me like C++ and shit, but yeah, overall, just being able to look at the source code and interpret it and kind of dissect it, try to understand it, really helped out a lot. So there's no better teacher than examples. So example source code is always good to look up. So if you're wanting to become a better programmer, example source code is truly phenomenal. Nobody in the live chat though. Damn. We're getting viewers. We're just not getting any interactors. That's all right though. Make sure you guys like the video though. We need more likes. Oh boy. But no, I hope you guys are all doing well. Hope you're all swell and well. Now I'm gonna probably do this show from the bamboo land for about an hour. We're already 23 minutes in, but once it hits the hour mark, I'm gonna end this stream. Maybe go find another spot to stream, and then we'll kind of go from there. But yeah, it's really, I love doing live events, live videos in places where people don't normally do live. I don't think a lot of people in this town would do a live video like this in a park. I have no shame. I'm one of those firm believers that the world is a stage. And it's a philosophy that's fairly contrarian these days. That, well, actually, no, I take that back. No, well, some people use the world as a stage for sure. But I mean, like this public park is such an opportunity. I mean, like, look at this. This is a beautiful backdrop. I can use this backdrop for pretty much whatever I want. I need to do more photography out here though, because there's like there's beautiful plants and everything like that. You could get some good photos, some beautiful plants. And I got a great phone with a great camera, so I might as well take advantage of that one of these days and maybe try to sell off some nature photos. It's better than selling feet pics on OnlyFans, which I should do that as well. There should be no limit to how much I have no dignity. I have no dignity. But yeah, overall, I mean, I think one of the big things for me is, I mean, like we talk about spreading out risk, spreading out my cheeks and all that shit on the channel. But one of the things we don't talk about, I think, I'm trying to think of the things that we don't talk about enough that we need to discuss. Now there are people, like I said, who constantly talk about you should care about the weighting, and I guess weighting is something that we don't talk about enough on this channel because, like I said, I don't give two hoots. I don't give two hoots about weighting of the portfolio. Like I said, it's fairly overweight in stocks. Fairly, I guess you could say it's underweight in bonds, but if you're diversified enough in U.S. stocks and international stocks, you kind of don't have much to worry about. Even though you shouldn't, even though I'm a bit of a hypocrite because I do say you shouldn't always overweight in the in like different sorts of things. I don't know, but when it comes down to it, though, I love having commodities like gold, silver, oil, all that shit. And but yeah, there's really no limit. There's really truly no limit. Um, one of my things that I always say to people, because my brother always wonders like why I don't buy anything, and I'm like, well, I work to invest, and I invest not to work. It's kind of my main dealio, But that's why I'm such a cheap ass, and I will always be cheap. But overall, it's like most of my money's for investing, not for consuming. I don't want to be like my parents. My parents were shitty with money, pissed me off. And I was a young Jewish man. I didn't even know it. That's the one thing I realized. I was a young Jewish man. And I never even knew it. And no, it's funny. It's just funny how bad my parents were with money. I was just shocked. Because they were good at making money, but they weren't good at keeping it. They always found new stupid things to buy, or they would get loans out. They would go into debt, credit card debt. Like my dad would get into bad credit card debt. He would have to pay like up the arse in interest rates, 25 to 30% interest rates. It was insane. My dad just, he thought that he basically, it's so funny because one day he cut up his credit cards, and he's still bad with money. Funny thing is, people cut up credit cards thinking that is the solution, and that is something that pisses me off. When I hear somebody say, "I cut up my credit cards, I'm all set, I'm all ready to live my life better," but they didn't actually delve into the root of the problem. The root of the problem is you, not the credit cards. The problem is you. And this is one of the things. And it's funny. I've got 10 credit cards, and 7 of them are in a high storage locker, and I don't touch those. I only use like 3 credit cards. And all those credit cards, by the way, I treat them like debit cards. And here, we're just going to go over this real quick because I think this is the one thing about the youth and credit cards. You don't be like my dad. Look, my dad is a moron with money, right? Biggest moron I've ever met with money. And he's honestly one of my inspirations for becoming an investor and not a consumer, because he bought so much dumb shit. All he cared about was impressing his stupid friends. And that's, you know what I mean? Like when all you care about is impressing your friends, it's a bad thing. Like I love my friends Billy and Nathan, but I don't go out of my way to impress them. I go out of my way to be generous to them, to help them out when they need it, to be a shoulder to cry on, you name it. But I'm not going to try to impress my friends, and they don't try to impress me either, and I love it. So the best thing you can do is find good friends like Billy and Nathan. That's the thing. You got to find good friends like Billy and Nathan. But overall, I mean, like for me, it's just like I saw how terrible my dad was with money, and I was like, dude. And like as a young kid, you see that, and then you start, because I would sneak a peek at some of his bills, because luckily I was a little bit of a savant at a young age, but not too much. But I understood finance to some degree, and I understood that my dad was borrowing money that he didn't have to buy stupid shit to impress people. And and I realized that at that age, I was like, I never want to do that. I don't want to go to fancy restaurants. Even if you're rich, the whole point about being rich is not to go to fancy restaurants. It's not to buy stupid Gucci bags, which honestly, if you buy Gucci bags, you are poor, in my opinion. I think it's so funny. All these rappers, they buy the gayest shit. Gucci bags is a great example of gay crap that rappers buy. Anyway, I'm not going to go into the weeds on that one, but because I could go off on a tangent on how stupidly homosexual rappers are. Like the whole rap game is extremely homosexual, right? I mean, rappers are wannabe rock stars. That's the conclusion I came up with, but they're also very closeted gay men. Look at Diddy, for example. Very closeted gay man. Look at, you could even say the same about Tupac, by the way. Some people theorize that Tupac might have been closeted gay. But I think most rappers are closeted gay men. That's my theory. Anyway, let's keep going to the originally scheduled program. God, I could go off on tangents all day. This is my problem. This is why I love doing live shows. I never know what kind of tangent I'm going to go on. I just never know where it's going to go. But, the tangents can go anywhere, really. But I do believe that most rappers are closeted gay men, except for Lil Wayne. And even if Lil Wayne was closeted, I love Lil Wayne. He's the man. He is, in my opinion, the GOAT rapper, the greatest of all time. Like, I love Lil Wayne. He's the best. But yeah, I'm on the right path. I'm actually making money on this shit. And yeah, I want to thank you guys. You guys have been a big part of this. Everybody who has watched this stupid show. You guys are, but honestly, I hope I provide a good value of service to you guys in the sense that, investing simple. I think too many people try to complicate investing. The whole idea is buy, hold, never sell, right? So you buy what you buy, you hold what you hold, and just don't fucking sell it. Just don't sell it. There's no need to sell your investments. This is one of the things I tell people, because the moment you trade your assets for cash, you've actually screwed yourself in the long term, because cash is inherently worthless. So if cash is worthless because it's not backed by gold, then all your investments are more valuable. So save your assets, not your money. This needs to be taught in schools. It isn't taught in schools. It's unfortunate, but yeah, save your assets, not your money. It's the simplest rule. So my savings account is literally a brokerage account full of ETFs and individual stocks. That's it. That's all it is. And I mean, I do have a high yield savings account. I think those are pretty gay. But it's the way I do it. It's the way I do it. Any questions in the live chat though? Got any sexy questions for the Mussy Man? I am the Mussy Man. I have a mussy. Yeah. I have a mangina. I get it. I'm like JT, baby. Justin Timberlake. All righty. But, what else we got? So is the Mussy Man. I am the Mussy Bussy Boy. The Mussy Boy. So, I mean, like I said, I spread my risk the same way I spread my cheeks. Right. So if I'm always spreading my risk, I think it's the smartest thing that anybody could do is keep the risk spread. But, yeah, outside of it goes, if you just model anybody who does things well, you're going to be good. I copy, mimicry is the greatest form of flattery. So if you just, mimic people who are living life right, then you'll hopefully live life right. I don't know. I still live my life like I'm a... Japan a little bit. I don't know. It's interesting. But, yeah, this is the most interesting place to do a show overall. Oh, we got a chat. Yo, Ultrafire says, "Yo, big homie, what up, G? What up, G dog?" Just doing the live show out in at the park, Mingus Park, in the bamboo forested area. It's a good spot to do a show. I felt like this would be the perfect area just because it's fun. I love being out in nature. I'm a nature boy deep down, and I need my morning energy drink. And it's only 10:40. Stocks Family Farm says, "Good morning, sir. Good morning, Mr. TJ, my man." It's good to see TJ on here. But yeah, just doing a little morning finance. I'm on vacation at the moment, which is fantastic. But Honestly, people are probably wondering, why are you working on your vacation? Well, I don't really consider this work. This is this is entertaining to me. I prefer to make videos instead of watch them. So it's kind of it's funny. The YouTube channel, something I don't really see as work. I get a lot of pleasure doing these videos. So because I know that somebody out there might get a chuckle, might get a little tidbit of information that maybe they didn't have before. And really, it's just kind of why I do on these live discussions, because I never know what idea is going to pop in my head. And it kind of pushes me to the brink of having to give you guys a good answer. And that's really what I want to do, is give good answers and help people along the way just understand a diversified portfolio. And that's kind of the key. The Mussy Boy way. The Mussy Boy way is drink Monster, which is probably bad. I don't know if it's probably bad for me in the long run. It probably is, but it's better than me drinking alcohol, man. I will admit, energy drinks have, oddly enough, kept me from drinking alcohol as much. I still drink alcohol on occasion, don't get me wrong, but I don't drink nearly as much as I used to, and it's a good thing. Um, let's see. But yeah, overall, like, I gotta give myself a second though. Gotta drink a little more of these. These are bad for you probably, so, but they're good for me, man. They keep me going. Let's see. Overall, though, I think if we were to boil down a lot of the, at least a lot of philosophy, I mean, it's pretty simple. I mean, like most of the time, I'm just kind of like, whether it's spreading out my risk, whether it's getting into different asset classes and stuff. That's the whole idea. That's the main thing here. So there's always a way to do it. It's always a good way to do it, at least. Um, but yeah, I mean, like I always say, the three main asset classes that I'm exposed to would be like stocks, bonds, commodities. I mean, that's like, those are the trifecta right there. And if I'm going with the trifecta, I mean, I don't really evenly expose to those, by the way. Like I said, 10% roughly of my portfolio is bonds, and then majority is stocks, and then the rest of it's like commodities and stuff. But yeah, that's the trifecta, man. Productive assets are the key. Um, Productive assets are basically like stocks and leased out real estate and crap like that. Um, yeah, there's no end to how much you can diversify, and ooh, kicking over my tripod almost, and yeah, it's pretty fun. Just just like I said, no real end to how much you can stay spread out, and spread out the risk, man. Spread it out. But cheers to that. I'll clink to that here. Clinking at the. Mm, Feels good to be on vacation though. A little bit of vacation's always a good thing, you know. Mm. Oh, oh, popping my back. All right. But yeah, like I said, really focusing on weighting of a portfolio is kind of BS anyway. I actually can't stand focusing on how my portfolios weight. I really don't care. Because the thing is, if you care about your portfolio weighting, right? Let's say your whole goal is 60% stocks, 40% bonds. We'll keep it simple. So let's say somehow your stock portfolio grows in value, right? Maybe it takes over. Maybe it takes over from, now it's 80% bonds, 80% stocks, 20% bonds because of the growth. You don't necessarily want to get rid of the shares that you own just because your portfolio is a little bit misweighted. Screw that. Weighting portfolios is the most annoying thing that they teach in finance, because it doesn't really matter. Um, if we're gonna be honest, if you wanna add more bonds to your portfolio, go ahead, but you shouldn't just get rid of some of your shares to make it to where it balances out the portfolio weighting. That is stupid. That is dumb, and I really want to emphasize how dumb it is. Portfolio weighting, and obviously not financial advice, but it's stupid. You talk to any fiduciary, they're gonna probably tell you that you got to weight your portfolio, but honestly, in my experience, you just got to be exposed to things that the government can't print. The main motto is, if the government can print it, just say no, and also say no to drugs. But also say no to money printing. Don't hold cash. Yeah, and honestly, anything that protects you against inflation. You know, people don't think about how much the Federal Reserve prints money, but the Federal Reserve prints a lot of effing money. Come on, man. That's how it goes. It's how it rolls. And so, yeah, if the government can print it, I don't want it, to be quite honest. And since the government can't create gold, that's good enough for me. I'm going to hold gold. I'm not going to hold the dollar. Because holding the dollar, honestly, the dollar is losing its Federal Reserve. I'm sorry, not Federal Reserve. The dollar is going to eventually, and I don't know when. I think it's sooner rather than later, though. The dollar is going to lose its reserve currency status, and we won't be able to print as much as we have been. So, however, a lot of countries are in debt. So this is where it gets interesting. A lot of countries are in debt. Where does it go from here? Let's see. Stocks Family Farm, my boy TJ says, I drink a few pots of coffee a day. I'm sure that's just as bad. It's honestly, coffee's at least a little more natural. Some of the shit they put in these energy drinks, man, I don't even know if it's good for your soul. I think it reaps out of the soul. But no, coffee at least is more natural. I mean, if you're putting a ton of sugar in the coffee, that might not be really good for you. But if you're just drinking coffee straight up, just black. I mean, I drink coffee black. I don't put anything in it. Mainly because I don't have taste buds, but I do actually like the bitterness of coffee. So I'm a weird guy. I'm very plain, is what I've realized. And maybe my plain diet has actually helped me out more than I realized, but not sure. Yeah, overall, it's probably the most unhealthiest thing I consume on the daily is just an energy drink, and then the rest of the time I'm drinking things like pomegranate juice and stuff like that. Keeps me good. I like to try to eat vegetables, obviously. I like my spinach. Not the biggest fan of broccoli, but I will eat it. Broccoli's pretty good. But yeah, outside of it, usually broccoli and spinach, sometimes asparagus. Those are my vegetables of choice. Usually apples and pomegranates are my fruit of choice. Honestly, Bill, pomegranates are insane, dude. The antioxidant profile of pomegranates is off the charts, which is one of the reasons why I drink pomegranate juice over green tea any day. It just has a beautiful antioxidant profile. Everybody talks about how like wine is good for the heart, but honestly, wine has enough alcohol in it to where you're just like, eh. So if you want to avoid the alcohol, just go for pomegranates. Like, pomegranates are incredible. And also, I think they come up with those wine studies to say that wine is good for you so they could sell more wine. Wine, I don't think is that great for you. It still contains alcohol, which, honestly, look at the wine moms out there. That's not good. Too many wine moms. My mom, unfortunately, was a wine mom, and she was very bitchy when she was younger, and she was very tough to handle. That's why I don't appreciate wine moms at all. Alrighty, let's see what else we're talking about. I can't really think of anything else at the moment, but we got 15 minutes to fill, so I'm gonna get creative. What else are we gonna talk about on this highly inappropriate show? How much battery life do I have still? 57%. Holy shit. I will admit the new Android update, the battery optimization's killer on this. Ultra Fire says I've been eating a ton of dates lately, fiber. Oh, dates or whatever the hell they're called. I know what you're talking about though. Yeah, honestly, anything that's fiber rich is pretty solid. That's something I need is probably a little more fiber in my diet. Oop, tons of crows, tons of crows. Where are these crows coming from? Too many damn crows. All right, so if I were to think about it, people, one of the biggest things that I see on the live chats, though, if I were to think about commonalities with you guys that you guys tell me to discuss, is what would I do if I was? How would I invest $10,000? How would I invest $20,000? You name it. I get asked that question more than anything. Um, I guess, I guess what's more important, I can't tell you guys how to invest it, but I will say if I was just starting out and you gave me $10,000 and I was just starting out investing, knowing everything that I know now, and I had $0 to my investing portfolio and I just got $10,000, right? This is just not financial advice, obviously, this is just my own philosophy. I would probably throw down, I mean, a lot of it would just go to ETFs. If I'm going to be honest, I would diversify as early as I could. I would get things like the VT, which is the Vanguard Total World Index. I would start racking up on the VTI, which is the Total US. So we got Total US. And VT, by the way, is Vanguard Total World Index, which is 60% US stocks and like 40% international stocks, but it covers a very wide range. But it's really a combination of just two ETFs combined into one. And technically, you can get fairly similar results, but if you wanted to weight it differently, you don't necessarily need VT. You can get VTI, which, like I said, is the total US market index, and then you can get the VX US, which is the Vanguard total like international, excluding like US, basically. So it's everything besides US, which is good. So if you're looking to to get that international exposure, I mean VX US is honestly one of the better ETFs out there, in my opinion, that you can get a hold of to get pure international exposure. Now there are other index ETFs out there that can give you the same thing. There's some Schwab ones. I can't think of them off the top of my head, but there are Schwab international ones. There are just plenty of options to choose from, and you don't necessarily have to be limited in any way, shape, or form. Every new generation. Let's see what else we want to talk about here. I'm trying to think if there's any other things. What else we got? It is fun to do these shows in the park, though. Makes for good short content material because I use Opus Clip to cut a lot of the. Opus Clip, by the way, is an AI video editor. It allows me to splice up different clips. Allows it to intelligently find the best parts of the live videos that I do, which is really nice. So it's a win-win situation, no matter what. Let's see. Ultrafire says any wild blackberry bushes around here. Actually, blackberries are all over the place here on the coast of Oregon. They're finally, I think they're starting to ripen up right now, if anything. Um, in fact, we're getting close to the Blackberry Festival, though, which will be very fun. I enjoy the Blackberry Festival quite a bit. Oh. But anyway, sorry, I'm zoning out real quick. um, but yeah, VXUS. If we're really going for like international exposure, um, I mean, there's plenty of ETFs that I would get into if you gave me $10,000 and I was starting out at $0 in a brokerage account. Um, but yeah, I would get the exposure there, and I would start getting into commodity indexes as well. Ones that have no K1. I hate K1 forms. They come so late during tax time, so effing annoying. I avoid anything that has a K1 form. So that's one of the things I look for when I look for commodity ETFs is I look for no K1. Like this is something I talk about all the time. Fuck K1 forms. They are terrible. They're awful. They're gross. You don't want a K1 form. Yuck. But yeah, most of the ETFs that I get into, if it does have a K1 form, I immediately I will do whatever tax stuff I got to do with it. But I immediately sell that one just because I want nothing to do with it. If I find out it has a K1 form and I've held it for a while, I'm like, bye bye, home to mommy. Let's see, but yeah, a lot of commodity ETFs are good as long as they have no K1 forms, and a lot of them now just are 1099 ones. So none of them are not all of them are limited partnerships or whatever. Thank goodness, because that's what allows for the stupid K1s to percolate overall. So yeah, avoid K1s. They are annoying. I hate them. And it's not financial advice. Talk to a fiduciary. I think most fiduciaries, most financial advisors would probably agree with me that K1s are annoying. But yeah, you can get ETFs that don't send you a K1. Thank goodness. Um, but yeah, commodity-based ETFs is another thing that I'd be racking up on with $10,000. Um, Honestly, really, just any ETF that I can get a hold of, I would start the diversification very early. Um, would I go for some individual stocks? Sure. I mean, I would only go with the ones that are like home run hits, like we're talking like really good ones. Like Coca-Cola would be a must-have. It honestly really wouldn't be any different than the portfolio I have now, except for it would probably have more ETF exposure. I would have some covered call ETFs in the portfolio. I'd probably do 5% starting out. 5% of the portfolio would be ETFs that use 100% of the holdings as collateral to then write the call contract itself to sell it for a premium. So covered calls are good to have in the portfolio, but not like a full. Like I think, if you litter your portfolio with covered call ETFs, it's a bad idea. Probably one of the worst ideas you could do. It's good to have some of them, but they lack growth and they don't have growing dividends a lot of the time. So while I love covered call ETFs, having them in my portfolio is great, especially during a bear market. But it's good derivative income. I swear, I love it. Um, the rest, like I said, I would spread out across as many ETFs as I could with that $10,000, as long as they were ETFs that made sense to me. Um, like VOO, SCHD would be another one. That's the Schwab dividend one. Just any ETF that at least exposed me to international companies. I'd probably be a little more weighted internationally if I'm going to be honest, because I do like the dividend payouts from international ETFs a lot more than I do the U.S. ones. But um, I would have also quite a few U.S. based ETFs as well. But mainly international, because like I said, it's very tough to get a hold of a lot of international companies through traditional means. So having an exchange traded fund is actually a godsend. I actually love ETFs. I'm a huge ETF kind of guy, and being able to have one share of every ETF that exists, or not every, but most ETFs is really a good thing. So, like I always say, not financial advice, but it's just my way of investing, and hope it's educational. And I think you should kind of invest your own way, but I think that spreading out your risk early, if you're just starting out, spreading out that risk early is really smart. Um, Especially if you don't know what you're doing. I mean, that's really the key. If you don't know what you're doing, spread out the risk early, and then you'll be on the right path. But yeah, overall, just invest like a maniac. Invest, invest, invest. It's pretty much the key there. Um, Out of anything else though, what else would I say? But yeah, no, productive assets are great, which is one of the reasons I'm so exposed to stocks. Is especially if you're diversified within stocks, which technically are called securities, but I like to say stocks just because when people hear securities, they don't know what I'm talking about. But whenever somebody says securities, that does also mean stocks, by the way. But I like to say stocks because it's a more familiar word to everybody. Um, so going over a lot of that, personally it makes more sense to me to just keep spreading out the risk through ETFs to get exposed to international. I think getting exposed to international companies early is a good thing too. So getting a lot of international ETFs early, buying at least one share of all the good ones early is fantastic. Buying one share of good U.S. companies that you know are solid is good. Um, I think you should still have ETFs that are like S&P 500 ETFs. Like the VOO is a great example. Schwab's got one. It's actually the SCHX. It's actually 750 companies, not 500, but it's pretty much 750 of the highest large cap ones or whatever. Either way, diversification's the key. Diversify early, especially if somehow you got $10,000. That's the one thing I didn't do when I started out investing a long time ago, is I didn't necessarily diversify as quickly as I probably should have, and that was the dumbest thing I could have done, was not do it. But spread out the risk as much as you can, and you're pretty much on the right path. And I mean, John D. Rockefeller did it. Warren and Charlie, for instance, Warren Buffett and Charlie Munger, they actually don't like diversification. It's a shame, but you know, I still think that even if you do know what you're doing, you should stay diversified because of the lack of future awareness, because you don't know really you can kind of predict how the future is going to go, but you can't predict the cataclysmic events that may happen. It's just tough to predict. Um, that's just kind of it. Let's see. Well, let's see. Let's see. Overall, what else should I talk about here? But yeah, see what else we got going in the super chats, the regular chats. Yeah, we'll probably end this stream here in just a second. Probably do a stream somewhere else in just a bit. You guys think I should review a beer? That would be kind of fun. Go somewhere, review a beer. That might be fairly entertaining. Preferably a place with an outdoor patio. Actually, Seven Devils is closed. It might be fun to drink a Keystone Light, though, on the Seven Devils property. That would be entertaining. They're closed on Tuesday. Oh, man. What else are we talking about here? So we talk about, if you're going to get commodity ETFs, try to make sure it's the ones that don't send out a K1, because as we all know, K1s are infuriating. For anybody who doesn't know, K1, like I said, comes in very late. There's frustrating. Screw K1 forms. Those are dumb. So I do not hold anything that sends out a K1 ever. Well, I have. It's not cool. I don't like them. I don't like K1s. But a lot of the holdings that I have just are pretty simple. I mean, nothing too crazy. But yeah, like I said, with the old $10,000 rule, if I have $10,000, I'm basically just I'm still doing what I do now. I buy a share of every ETF that I like, that I know is good, that I'm familiar with and have done research on. I buy a share of individual companies that I know are solid, that have healthy cash flows. If it has no cash flow, just say no, is my motto. And that's something I learned from Kevin O'Leary, which Kevin O'Leary, in a sense, learned from Charlie Munger, because he did say that he grew a little Charlie Munger on his shoulder, because that is a Charlie Munger. I wouldn't say an exact quote, but Charlie Munger does believe if there is no cash flow in this company, I'm not going to take a chance on it. If it has established cash flows and it's proven itself as a company, well, I'll add a share of it for sure. Otherwise, I have very spread out. I have ETFs that expose me to a lot of different companies. I have like a small cap ETF. It allows me to be exposed to small cap companies without the risk of owning too many of those companies myself. So there's huge advantages to exchange traded funds that people don't necessarily always talk about. And I don't think there's too many disadvantages, honestly. I mean, the only disadvantage is that some of the money that you put in does go to the fund's operation. So, for example, if you see like a 0.07% expense ratio, that essentially in that scenario, for every $10,000 you trade in to get that ETF, $7 of it goes to the fund's operation. So, in the long run, it does matter to a degree. It is very small potatoes, though, because they're managing the fund, and there's not much to manage with an index. If we're going to be honest, that's why the expense ratios for index ETFs are so low, because there's really not much to manage. They're not actively trading anything. They're not doing anything too wild. They're just essentially buying and holding a set amount of holdings. That's really it. Now, for more actively managed ETFs, those expense ratios can get a little higher. So if you see one that's like 0.25% expense ratio, then you can conclude that for every $10,000 you invest, $25 of that $10,000 is actually going to the fund operation and not towards an investment. So I do tend to go for the very low expense ratio index ETFs. I don't mind that the expense ratio exists. If I'm going to be honest, I really don't care, because there's still gains to be had from owning these. I know that they're managed well, and I know I don't have to think about the management of them, which is good. And preferably, though, I don't like actively managed ETFs. I'm not a big fan. I own them. I own some. I still have at least a share of several actively managed ones. I don't really like them as much as an index one. Index ones are my preferred. And if we're gonna go over the weighting of it, I would say like probably 70%, probably actually maybe 85% of my ETF holdings are all index ones for the most part. Whereas 15% are like more actively managed, kind of wacky ones, like derivative income sort of things. I love derivative income though, man. Like that's why I love covered call ETFs so much, because just having some of those in a portfolio can really be handy overall. Yeah, it's pretty fun though. Let's see, but yeah, like I said, if you're gonna get into anything that sends out a K1 tax form, I avoid that like the plague. So when it comes to commodity ETFs, I like to make sure that they're the kind of ETF that isn't like some weird limited partnership garbage. Um, and if it is like one of those limited partnership ones, I'm like, ugh, does it send a K1? If it says it sends a K1, I want nothing to do with it. I hate K1 forms. They're the most annoying things to have during tax season. And one thing, if you are as diversified as I am, and you're not too sure if the companies that you hold are going to send out a K1 form, I mean, one trick you can do is you could use AI. So you can, if your brokerage allows you to, I think your brokerage, depending on which one it is, I think Charles Schwab allows this. You can actually have the brokerage account create a spreadsheet. Oh, hold on. I'm getting choppy. Hold on. This live broadcast is hopefully a little better. I had to close out of the YouTube app and then open back up, but I think I'm back. I hope I'm back. Yeah, sometimes I can get a little choppy if I get out of it and go back into it. It's a little trippy sometimes, but yeah. Overall, if it sends a K1 form out, I'm like, screw that, because they send them out like towards the end of, like almost close to the end of tax season. It's the most annoying thing in the world. So I just avoid any of those limited partnerships or style ETFs or any of those style companies. I avoid those like the plague. But yeah, overall, as long as it's all part of like a 1099 consolidated form, that's all I'm really looking for. Basically, you want to make it to where your portfolio is not a tax burden. You want to make sure that you're not being annoyed during tax time. Um, and it talk to any tax expert. I think a lot of them would agree, and this is not tax advice by any means, but I'm sure a lot of them would agree that K1 forms are annoying, and the best thing you could do is avoid them and stay out of things that send them. Um, Now, this is not to be a deterrent into those. Maybe there are some that are good, but I'm just not a fan of anything that sends out a K1 form. Because I've gotten a couple K1 forms from some of my holdings, and I didn't realize they were like limited partnerships, and I had to, do the taxes on them. Luckily, it wasn't that big of a deal, but it's one of those things that I avoid. Anything that K1s are the worst at all. They're not like hard or anything. They're not difficult to figure out, but they're just annoying because they come so late, right? It's just stupid. So K1 forms. If I were to say what the most evil form is, it's K. No, I don't really know what the most evil form is, but I avoid K1s. That's what I'm trying to say. Let's see here, but overall, gonna keep. I mean, yeah, I mean that's like my main thing. Avoid K1 forms. I mean, just avoid limited partnerships. Those are just so annoying. Anything that sends a 1099 is totally fine, but yeah, no, keep spreading out through the trifecta. The bonds, stocks, commodities. I mean, as long as you stay in those asset classes for the most part. There's other asset classes, I guess you could technically say, but commodities spread out a very wide range. I mean, virtually anything can be a commodity these days. Um, I mean, you got gold and silver. Those are my primary ones. Gold is the one that I love the most. But if we're gonna say buy the dip, I mean buy the dip on silver, because silver, the silver markets, they fluctuate a bit. Um, but yeah, if I were to buy the dip on any precious metal, though, it would definitely be silver, just because sometimes it can be very volatile. Um, and it's not financial advice by any means, but it's just the way that I do things. It's the way that I operate. Um, Yeah, let's see what else do we got here. But yeah, that's how I would do $10,000, man. I would still do what I do already. If somebody gave me $10,000 and I'm starting from zero, I mean, that's what I would do. I'd spread out my risk, and it's there's nothing too fancy about it. It's really just a buy and hold investment portfolio, and uh, I mean, if you spread out your risk, you don't have to really worry about your portfolio at all. Because you get the nice yields from the bonds, you get the growth from the stocks, and you get inflation. You get to protect your wealth by having gold and silver. I think gold is more of a protector. If we're going to be honest, gold is more of a protector against inflation. Now, silver's good. Silver is a competent commodity. It's good to have. I mean, the reason that these commodities are sought after is because they are very useful. Silver is used in electronics. Silver is used in all sorts of, even in medicine. Silver is utilized, which is super cool. But yeah, I love it. Like, but gold is my favorite because it's so malleable. It's people. I mean, people are always going to be seeking gold, so holding gold isn't too bad, and especially since it's a good inflation hedge. Yeah, gold is the real money. I mean, the cash that you have in your pocket is virtually worthless because it's not backed by anything of real value. Which is why I would rather hold gold any day of the week overall. Um, so that's my main thing. It's the main gist. I'm a gold man. I like my gold. You got to get my gold. You can't get my lucky charms. You can't get my gold either. I am the leprechaun of the park. But overall, like that's the thing for me. I'm just like boom, boom, boom. I mean, if we're really boiling it down, you just got to spread out your risk. You got to say spread. You can't be like, how would I say this? You can't just be into one thing. And I think that look, even if you were spread out in one single asset class, that's fantastic. But I still think it's not enough. I think that you know, like I could sleep well at night knowing that I have exposure to U.S. stocks and international stocks at a massive scale. I could sleep well at night, right? But the goal is, and here's the thing: don't ever look at so like here's what Ultra Fire is saying, all in the red. It doesn't matter if the markets are tanking. Who the hell cares? Because you have to know that what you're investing in is actually valuable in itself. So if you're a smart investor, you look at times of market turmoil as a buying opportunity, which is one of the reasons why you should have cash on reserve. Because if you have cash on the reserve and a bear market happens, you could buy everything that everybody's selling off at probably near book value if you're lucky. Like bear markets are just an opportunity, man. And it blows my mind when people think that a bear market's not an opportunity. In a lot of ways, though, if you think about it, a bull market's a great opportunity when there's when there's something stupid that's in a bull market, right? So I'll give you an example. One of the things that I bet against frequently is Bitcoin because Bitcoin is phony baloney dildo money, right? So because I bet against Bitcoin so much, I trickle bet against it, and I'm going to tell you what the trickle part of that means. So I get into ETFs that allow me to profit from the downfall of Bitcoin's price structure. I get into the SBIT preferably because there are swaps that I can get into, which are really nice. I love swaps. Give me a swap any day of the week, right? So I'll give you an example. Everybody's calling me crazy because I bet against Bitcoin on a bull run. Here's the thing, though, that people don't realize that I think it's crazy that everybody's buying Bitcoin as the price goes up because Bitcoin is phony baloney dildo money. I'll say this one more time: phony baloney dildo money is what Bitcoin is. It is trash. It's not backed by anything. It's literally a string of data. That's all it is. And as much as I love Trump Daddy, and I think Trump Daddy's great, by the way. Trump's the man, but him backing crypto, it pisses me off. Like, if there's one thing that I disagree with my boy on, it's crypto. Crypto's dumb. It is just dumb. And I think that Bitcoin is going to go the way of the NFT. It's going to have a massive bear market because what happens is when a massive sell off does happen in Bitcoin, it is a cascading effect and that shit goes down. So anyway, it's just a string of data at the end of the day. It's not backed by anything, and if it can't really be backed by anything, then what the hell's the point? And the thing is, it's decentralized, sure, but it can never be a store of value. That's the point I'm trying to make. It can never be a store of value because there's nothing inherently valuable about it. And if something can't be backed by anything, then it has no real value. This is one of the reasons why I frequently bet against phony baloney money. Like, I bet against Bitcoin all the time, and happily so. In fact, whenever Bitcoin dips, I make a lot of money. I make a lot of money. It's because I intelligently bet against it during bull markets, and people wonder, why would you bet against it during a bull market? And I was like, why not? It's an opportunity. I can get this SBIT ETF at a lower price, and I don't have to buy all of it. I just buy one share at a time. And if it goes down again the next day, I buy a few extra shares again, because I think Bitcoin is phony baloney dildo money. And hey, look, even if Bitcoin does go to $1 million, by the way, I'm not stupid. I got into Bitcoin early. I got into it really early, actually. I never sold it though. So I have a lot of unrealized gains because I never sold it. But what I do to make money off of that holding, even though I think Bitcoin's worthless, because I got into Bitcoin thinking that it might be the future. That was when I was a little more naive and didn't understand what actual value was, and maybe thought, okay, maybe this is the future, and maybe I should give it a chance. I mean, I started to realize, the more you look into it, the more you look into the software, you're starting to realize it's like, whoa, this is a huge grift. This is not valuable in any way. I need to bet against this, because betting against it is honestly the smartest thing I could possibly do. So, bet against anything stupid is really the key. Is really, honestly, is really my investing philosophy. You know, as far as actively trading goes, that is my philosophy. I will bet against something stupid, and make a good profit off of it, especially if I already own that stupid thing. And I've gotten a lot of unrealized gains from it. But yeah, no, the thing is, a lot of these people who get into Bitcoin at like $110,000, $120,000, if it even gets to that point, they're going to be, the people who get into it at that high are going to be the bag holders for sure. They always end up being, like, these people always end up being the bag holders because they get scared, they panic. And it's all a big MLM scheme. It's basically a digital MLM scheme where the original investors who got in try to get in at higher prices, and by doing that, you can actually sell your stupid phony baloney dildo money for a higher price. So I mean, Bitcoin is basically a gambling grift, and anybody who promotes Bitcoin, including my boy Donald Trump, is a bit of a grifter. And I hate to say that. I love my boy. I think he's the man, but he's grifted. So, but yeah, overall, when it comes down to it, though, I believe in things that have real value. I believe that's one of the reasons why, like I said, I always invest in things that if the government can print it, just say no. You know, it's like I say no to drugs, and I say no to anything the government can print. I say no to that as well. So if the government prints money, I don't want the dollar, because the government can print it. I say no to that. So I invest into things the government can't technically print. I get into gold. I get into stocks. Well, bonds are kind of not very inflation proof, but I'll get into bonds anyway for the guaranteed yield. But yeah, overall, I just avoid all that stuff, and it's fun. I always like try to avoid what I can, at least avoid anything that's a bad investment, that sort of thing. But let's see here. Oh, I don't care. I'm just doing a weird show at the moment. Okay. Oh no, it's okay. But no, it's funny. There was a family taking a photo, and it's like if I'm doing a show in a public place, I should always expect to have. It makes it more fun anyway. I enjoy it when people are this is a park. This is a public park, so that's my bad. But yeah, overall. I avoid anything that's like phony baloney dildo money. If I consider it dildo money, dude, I don't want it. Bitcoin is dildo money. It's belongs in my ass. Is what I'm really trying to get at. Is Bitcoin is dumb, and if it were real, I'd put it in my butt. But it's not real. I can't put it. I guess I could store the Bitcoin on a USB flash drive and shove it right up my arse, and that would work. Okay. But yeah, Bitcoin's dumb and it belongs up my booty. But yeah, no, overall, it doesn't really matter what the market does in the long run. If you're a long-term investor, you don't really give two craps about what any market does. All you care about is getting into things that are valuable, making sure you stick with those valuable things, and yeah, it's as simple as that, you guys. There's nothing that's overly complicated about my investing strategies. It's just really stay spread yourself out, man. Honestly, treat it like real estate, man. If I gave you, let's say you had $2 million to spend, right, and you could go all around Coos Bay, right? I give you $2 million to go spend on whatever real estate you want. Would you go buy just a couple of mansions? No, you probably buy some of the normal houses. In fact, actually, how about this? Let's say I gave you $10 million. Say I gave you $10 million to go out and buy whatever houses you wanted in Coos Bay, North Bend area, right? You would probably not actually buy the $1 million houses. You might have maybe one of them, because you want to have really high value houses. You want to stay a little spread out. But not only would you buy the high value houses, you'd probably buy, actually, the smartest thing you could do is buy houses that are kind of on the hills, but not on the hillside, if that makes sense. They're not like in an area where it's going to have a slide. You still want to buy homes on level ground, because you never know. But the thing is, man, even if you gave me $10 million and told me to buy it on real estate, I'd probably still take about $2 million, spread it out across ETFs and shit, and then I would take the $8 million. If anybody gave me that amount of money, then I would see what sort of real estate's out in Coos Bay, North Bend area, and I would just kind of like buy the $200,000, $300,000, $400,000 houses, even though I don't think most of them are worth that, but they would eventually appreciate to a better value. I'm not much of a real estate guy, if we're going to be honest. I think real estate is kind of sometimes in a bubble, but there's always a demand for homes and stuff. I'd probably try to buy as much property as I could, though. That would be my main thing, is how much property could I buy? Like, how many acres? I think the one thing that pisses me off about real estate, though, is property tax. I don't like having to pay property tax. I find that very annoying. But yeah, no, overall, I mean, you give me $10 million, I'm even crazier than this. I'd probably put $1 million. Well, I I spread out $1 million across a high yield savings. Then I'd put maybe 2 million into like an actual brokerage account, or well, maybe several brokerage accounts, spread that out across several different ETFs and crap like that. And then I'd probably buy some real estate here. So, I mean, you give me that much amount of money, I'm going to be spreading it out all over the place into different assets and asset classes. See, I need to spread out my risk. I think even owning just a couple of homes is a little too risky for my biscuit. But and I probably hold the real estate and sell it off for a profit. Would be what I would do with each of those. Hopefully, maybe you won't profit off it. Maybe the housing market will crash. That's the thing. That's scary about buying a home, especially during times where you think the housing market might be kind of a little too high. I think what scares me the most is when it's tough to tell. See, the thing is, you can measure the value of a company a lot easier than measuring the value of a house. This is one of the reasons why I prefer the stock market over the real estate market, because it's actually easier for me to figure out if a company's good or not, versus it's a lot tougher for me to figure out if a house is worth the price that they're putting out there for it in the market. I really do think real estate prices are inflated up the ass, though, and that's what scares me the most. Is if I'm buying a house, I might be screwing myself. It's one of the reasons why I prefer to rent, because a lot of my extra money doesn't go to property taxes; it goes to my investments. So as long as I can continue to invest the way that I invest and not have to worry about it so much, I'm a happy boy. Like, there's not much to complain about after that. But yeah, other than that, I can't wait to see. I think Bitcoin's going to crash. I hope it crashes, because it's a terror. It's phony. Like I always say, this is one of the biggest things I say on my channel. If it's phony baloney dildo money, I don't want it. Right? I just don't. And I love saying phony baloney dildo money. I don't know why. I got that from my boy old man Tyree. from back in the day. Surprisingly, not a lot of people in the chat. That's okay though. I don't need you chatting, but no. Overall, there's not a lot of chat interaction at the moment. I'm fine with that because I could keep going on and on and on. But overall, and this is a fun morning show though. This is what I like though. Ultra Fire says the real estate market is in unprecedented times, in my opinion. Home values doubled in less than 5 years. Blah blah blah. High interest rates coupled with outrageously high home prices. Yeah, I mean honestly, it's harder for me to value the value of a home. I could value a company easily. I just got to look at its financial sheets and stuff like that, right? Its balance sheets and financial statements. It is so much tougher for me to figure out if a home is actually worth its price. It's easy for me to figure out the value of a stock. If I'm paying way too much for it, I can figure that out. If there are valuations you can make, I would say that the stock market is a more perfect market. It's not, there are still other factors that go into the stock market can be just as volatile as the real estate market, if anything. But I believe if a real estate crash happens, which I'm not sure it will, a lot of boomers don't want to sell their homes, and rightfully so, because if they sell their homes, they're still going to an overinflated market, which it's tough to say. And when the demand is so high for homes, but nobody wants to sell, obviously real estate prices are going to keep going up and up and up. And that's what people are trying to figure out. But overall, it's good shit. Let's see. Okay. Let's see. Ultrafire says, I believe usually high on tray rates, offset with lower home prices or vice versa. Yeah, that's interesting. But yeah, overall, man, for me, it's like I just don't like. I'm just not a fan. Not a fan at all. Let's see. What was I covering here? Let's see. Investing, cash workout. It's like, yeah. Overall, I mean, like if houses are tough for me to determine, like when it comes to value, recognition, it's easier for me to figure out if a company is good or not versus to figure out if a house is actually worth its weight in value. Because there could be underlying issues with the house. There's so many variables. That's why I'm not a big fan of real estate, if we're going to be honest. I've gotten richer by staying away from real estate. Most of my wealth comes from investing in stocks. I will say though, I do have quite a few real estate investment trusts, which, if we're going to be honest, real estate investment trusts are the creme de la creme, the greatest. You're probably thinking, why am I so obsessed with real estate investment trusts? Why not? Dude, I mean, honestly, because it's a way for me to have a diversified portfolio of real estate in a lot of ways, because when you're the owner of those companies, of those real estate investment trusts, the REITs is what they call them for shorthand. If you're owning all these REITs, you're owning companies that own a bunch of real estate, then they lease out all that real estate. It's pretty dope. So I don't know, pretty cool shit. But still thinking here. Still, this show's gone on a lot longer than expected. I figure it's like I got 43% battery still. Well, my girlfriend's probably going to be on lunch here pretty soon. I'll hang out with her for a little bit. Yeah, I'll probably head home here, make myself a little bit of lunch, just a few moments. But yeah, overall, yeah, just a lot of opportunities, man. I think that you don't want to miss out on any. And you guys are getting a hell of an education right now. This is like accumulated knowledge that I've had for a long time, a lot of experience too. And my experience tells me, man, that you just got to spread out your risk. Ultra Fire says, good live, man. Thank you, bud. I appreciate it. Yeah, I try to, Yeah, I try to cover a lot of topics quickly. Sometimes I go off on tangents, and mind you, I want to apologize. Maybe that's the part of the charm of this show, is when I go off on tangents. Um, but yeah, I really enjoy having a portfolio that I can look at and know it's gonna be fine, right? Because like, let's say stocks and bonds go down, I got enough commodities to back my ass up. And by the way, if stocks and bonds go down, sure as hell no, Bitcoin's going down too. Because Bitcoin is valueless, and if things that are valuable are going down, so are the bullshit that are valueless. So, yeah, I'll keep betting against Bitcoin, that's for sure, because there ain't nothing better than betting against a Ponzi scheme. But yeah, betting against Ponzi schemes has really actually been one of the big funders of my portfolio. Me betting using SBIT to bet against Bitcoin has allowed me to get some extra money just by trickle buying, trickle selling. You know, just I buy the SBIT on the lower price. When the SBIT goes low, I buy a little more. SBIT starts going on a bull run because Bitcoin's going down. Boom. It just does the opposite basically. SBIT does the opposite of whatever Bitcoin's doing, and by the way, it's at a 2x leverage rate. So if you're using 2x leverage on the minus scale, it's literally doing the inverse of whatever Bitcoin does. So inverse ETFs are great if you want to bet against something ridiculous, right? Or if you want to bet against something that is not ridiculous. There are inverse ETFs that allow you to bet against the S&P 500. The UVXY is one of them. I do like playing the volatility of that sometimes. I'm not a big fan of always playing it though, because I believe in the long term, I believe in the S&P 500 because they're really good companies. So it's stupid to bet. It's stupid to bet against something good, but it is smart to bet against something stupid, right? If something is dumb, then it's good to bet against it, right? And so anything that's a Ponzi scheme, anything that resembles an MLM scheme of anything, that's why it's so important to bet against those stupid things if you're going to actively, if you do active trading, that is. Now I'm a long term guy. I'm all about the long term. So if you keep that risk spread, you could be, fairly secure in the long term. At least that's the way I look at it. But yeah, honestly, that's just kind of how I do it. Because here's the thing: if something's super volatile, but if something is super ridiculous, it has no intrinsic value. Because the old motto goes, anything with an intrinsic value of zero eventually goes to zero. So using that logic, you can then bet against the thing that's set to go to zero. You may not know exactly when it will go to zero, but you could bet against that thing if you know that it's worth betting against. So at least that's the way I look at it. And I will always happily bet against it. But overall, I think we covered the majority of what we wanted to cover. Yeah, that's it. It's all free information for you. But yeah, my experience led me to this point. So, but yeah, I think I'm gonna head home and probably chill out for a bit, make myself some lunch, probably cook some burgers. I don't know. But I do want to, let's see if there's any live chats here. Anything else? Yeah, it was pretty good. And overall, actually, let me see if there's anything else I need to cover here. Covered that. Covered that as well. That's good. Yeah, I think we covered the majority. But yeah, just remember, stay away from phony baloney dildo money. Anything that sounds like an MLM scheme is an MLM scheme, just to let you know. So anytime you get in, like if a lot of the Bitcoin bros, they're always like, "Oh, you better get in now, or else you'll never be rich." It's like, dude, that's MLM talk, and that's why I bet against it. So I bet against anything that's a pyramid scheme. I mean, what else can you bet against? It's like there's plenty of ridiculous things to bet against, and I will always, I mean, not too many things, honestly, but yeah, anything with an intrinsic value of zero, like I always mention on the show, eventually goes to zero. So betting against Bitcoin is the only logical course, and it's fun because every time Bitcoin crashes, man, I make a lot of money, lot of money, and it funds the portfolio. And what's better than that? And then I could use that extra profit towards towards more long-term investments and keep going from there. Overall, though, I don't know if I have anything else I want to say at the moment. Except for thank you guys for viewing as always. The more viewers we get, the better. It keeps the show going. More likes we get on these videos, it gets better than that. I was a little sad I couldn't do like a poll or anything like that. It wouldn't let me actually do a poll. Normally it does. I think it's usually in the vertical if I'm doing the vertical stream, but that's all right. But yeah, we're at the park doing our thing. I'm on vacation at the moment, so this is what I'm doing right now on vacation. And yeah, it's something I enjoy. Anyway, I want to head home. Thank you guys for viewing. Bye for now.